Today, I want to talk about how the data shows and proves the shorts are about to give up, cause the squeeze and pay out. I also want to talk about how Adam Aaron and AMC have just sued Antara Capital. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Pick tweeted saying hedge funds have ramped up leverage to near record highs in order to juice returns. These hedge funds aren't making enough profits and they desperately need more. So it says Goldman Sachs' note showed that hedge funds' leverage in equity positions was at almost 3 times their book value, compared with 2.35 times a year ago. Basically saying that all hedge funds on average are using at least 3 times leverage, taking their money, borrowing double that and dumping all of that money into stocks. Imagine taking all of the money you have saved, remortgaging your house, and then borrowing more money on top of that to dump it all into stocks. That's what hedge funds have been doing this year. This number is also at record highs compared to the last 5 years. Again, JP Morgan showed current use of their leverage at roughly 2.7 times, and that it's close to a peak reached since 2017 and higher than 98% of the time it's been tracked since then. So what does this actually mean? What does it mean for AMC? And what does it mean for the squeeze? Well, it means that hedge funds have been juicing their leverage in order to juice their returns. They desperately need more money. To earn more money, these hedge funds are taking a gamble, they're taking a bet, they're taking a risk, and they're trying to leverage their money in order to earn more money. But why would these hedge funds be so desperate to leverage returns if the returns they've been generating over the last 10, 20, 30, 40, 50 years have been satisfactory, but aren't satisfactory any longer? Clearly, these hedge funds have some kind of big expenditure coming up that they desperately need more cash for. Again, on top of that, StockTwits has tweeted saying to name something more useless than a Wall Street price target. Now, over the last few months, you will have seen tons of these Wall Street analysts upping their price targets on stocks like NVDA, MicroStrategy, AMD, and many others. Their targets have been increased from $400 to $600 to $800 to $1,000 to $1,200 on NVIDIA, many times that on SMCI or super microcomputers, and also on MicroStrategy as well. But so the question is, why do these analysts actually increase price targets? Why have they been doing it pretty much every single week, back to back to back to back over the last few months? Well, the real reason these analysts increase price targets is because their hedge fund or their hedge funds haven't yet finished selling shares. They need the prices to go higher, they need more retail investors to buy in, so those hedge funds, those market makers and those banks can sell off their shares before the market crashes. They need NVIDIA not to reach $800, not to reach $900, not to reach $1,000, but to reach $1,200, maybe even higher. Because these hedge funds still have shares they need to sell off, and more importantly, they still have profits they need to make. These hedge funds, market makers and banks have pumped NVIDIA from $300–400 per share already to $900 per share using 3x leverage, and that's still not enough. On NVIDIA, from $300 to $900 is a triple or a 3 times return using 1x leverage. But again, a triple on 3x leverage is the same as a 9 times return, or 900%. But yet, for those hedge funds, those market makers and those banks, a 900% gain on those long on NVIDIA is still not enough. They need more. But why on earth, or what kind of situation would mean that a 900% gain on one single stock isn't enough? As I said, unless these hedge funds, market makers and banks have some kind of giant expenditure they need to shell out for. These hedge funds know they can't escape the squeeze, they know the squeeze is coming, and they're just trying to make enough money to pay out for the squeeze. Today was also another brilliant day in the Millionaire Mindset Trading Group on CLRO. You can see Van locked in 52% profits, and Green Trader had his 5th profitable day in a row, securing at least 25%. His account has now gone from just $600 to $3,000. We also had Steel Trader making 72% gains on RGLS and Jaybird making $1,803 in a single day. Guys, if you want to join in with these gains and join in with the $1,000 to $10,000 challenge in the Millionaire Mindset Trading Group, be sure to join the group using the link in the description below. It also seems these billionaires are starting to wise on to exactly what Wall Street is doing, and they have been selling shares. You'll know I've touched on Bill Gates, I've touched on Jeff Bezos, I've touched on the Walton family that own Walmart, I've touched on numerous politicians, but again, Mark Zuckerberg is now top of the list. Mark Zuckerberg has just sold another $78 million worth of Meta stock, bringing his total sales to nearly $1 billion this year. Again, Zuckerberg joins billionaires like Jeff Bezos, Bill Gates, and the Walton family cashing out big in 2024. Again, why are all these billionaires cashing out big, one after the other, after the other, after the other, back to back to back to back? Because they know the crash is coming. They know these hedge funds have to pay out, so they're just riding a wave. If they're seeing their respected stocks at $500 per share or higher, they're taking the cash and they're running. They know once the squeeze happens and the market crashes, or the market crashes and the squeeze happens, their stocks may not see these highs for many years to come, and therefore they're cashing out now. Especially as Stonks Batman has tweeted, he said more than half AMC reported short positions are under $8.30 per share. These hedge funds haven't been shorting from the $72 high pre-split or $300 and whatever dollars it is now post-split. They've been shorting at $8 per share. That means as soon as AMC runs over $8, more than half of the reported AMC short positions will be underwater. Let alone when it hits $10, $20, $50, $100, $500, $1,000 and higher per individual share. That's why these hedge funds will be liquidated. That's why they're saving up money to pay out for the squeeze, and why these hedge funds know the squeeze is coming. As I touched on in my video yesterday, these hedge funds have tried desperately kicking the can as long as they possibly could over the last few years, creating tons and tons of different ways to kick the can, but they know it only delays the inevitable. It doesn't remove the liability, it just extends their time frame. They may have also seen this article from Seeking Alpha saying that bankruptcy is not completely off the table for AMC, but I want to dispel a bit of FUD within this article with the help from Crystal Ball. So this article says that management have stated there is a risk of liquidation or bankruptcy in the latest 10K for AMC's financial statements if they can't restructure their debt, saying a Chapter 11 bankruptcy plan could equitize debt to allow AMC to continue to operate, but bankruptcy might wipe out shareholders. They've then mocked retail investors, saying AMC has been able to kick the bankruptcy can down the street for the last 4 years by selling shares, but eventually that can could get kicked enough that it falls apart and AMC is forced into a Chapter 11 bankruptcy filing. They're basically saying AMC is even likely to go bankrupt because AMC might not be able to restructure their debt. Now first, let's start by dispelling that FUD, or by the slight over-exaggeration of Seeking Alpha. So Crystal Ball has tweeted saying there is no chance AMC goes bankrupt. If it does, I'll delete this account. That's how confident I am that it won't happen. He said companies always have to put a disclaimer about risks in filings, and that's standard legal practice for all companies. That's something I can completely agree with, being a previous chartered accountant over here in the UK. All companies around the world have to legally disclose what's called a going concern paragraph, saying there is always some minute chance of bankruptcy, and therefore we have to disclose that. Even if the chance of going bankrupt is 0.1%, we still have to include it in that going concern paragraph by law. Yes, technically there is a very minute chance AMC could go bankrupt if it can't restructure that debt, but AMC is practically guaranteed to be able to restructure it. Why? Because loans can always be restructured, they can always be renewed, they can always be remortgaged, and the last time AMC restructured some of its previous debt, there was tons of hedge funds and private equity firms willing to snap their hand off and restructure that debt for a lower and lower interest rate. Yes, AMC could go bankrupt if they can't restructure their debt, but fortunately for AMC, there's 20, 30 or 50 firms lining up outside AMC's doors, begging them to restructure the debt for even a lower interest rate than they currently have. As a prime example to support that, back in 2022, AMC was originally planning to issue $500 million of bonds with an interest rate at 10.5%. But they had so many applicants, they ended up issuing a $950 million bond with an interest rate of just 7.5%. Whoever bought those bonds was happy to pay a lower interest rate for AMC because they knew that AMC would definitely pay back those bonds. Therefore, AMC can easily renegotiate and restructure bonds when and as necessary. In fact, S&P Global Ratings recently increased AMC's credit rating, suggesting there's more and more companies willing to renegotiate or restructure their loans whenever ready. So therefore, AMC won't be going bankrupt because they can easily restructure and renegotiate their debt when and if needed. And the funniest part of all of this is the guy that even wrote this article discloses he has a short position in AMC and therefore is clearly biased towards the short side for AMC's future. As Matt tweeted, he said it's quite literally a short and distort article. Now on top of that, Robert tweeted saying that AMC just got paid by Antara $3.3 million. You can see here a federal court has approved a proposed settlement for Antara to pay AMC $3.3 million. That's because Antara violated the short swing profits rule under Section 16B of the Securities Exchange Act. So again, AMC caught Antara doing something wrong, doing something illegal, and Antara have paid the price. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.